Good morning, everyone. You're all very welcome to another weekly market outlook here at the Alpha Capital Group. So obviously this week, first full proper week back into the financial markets. Of course, we did have NFP on Friday. We do have a number of important pieces of information coming out this week. We have Powell from the Fed speaking today. We've got CPI on Thursday. So we're really starting to get back into the flow of what we'd expect to have normal volumes, back to normality as we begin 2023 in the broader sense. So I suppose first things first, if we look at the economic calendar today, the most important points of interest really as from a fundamental perspective is, of course, some news and some information starting to come out of Japan with the inflation levels starting to tick up. Broader economical data points are starting to increase in Japan, which is obviously interesting given the current fiscal policy that the BOJ have been undertaking for the last obviously 12 months or so, propping up the yen, and then obviously tail end of last year increasing the cap on the JGBs, should I say 10-year bonds in Japan as well. So that's going to be an interesting narrative to keep an eye on over not just this week, but over the next kind of 3 to 6 months, because of course, if the CPI figures in Japan broadly start to tick higher, like what we've had in Europe and obviously in the US and globally, broadly speaking, then that's going to put a lot of pressure on Japan's BOJ to actually start having a more hawkish approach to its policy to tackle obviously the higher inflation. Now, of course, at 2.5% approximate region at the minute, they don't have too much to worry about, because that's where a lot of central banks say they would like to have their inflation levels contained at. Now, of course, if that breaks 3.5%, then it becomes a very, very different argument, because of course, if interest rates do increase in Japan, that means the debt financing increases dramatically, because of course Japan's, I suppose, fiscal policy that they've undertaken for close to the last 40 years or so. Now, today, in the broader sense, we do have obviously data coming out. We do have Powell speaking today in the markets, that's prevalent. However, on our second screen here, we have obviously shared some information in our Discord today that we have Bailey speaking now. He's on the wires very, very shortly. We've got Schnabel speaking from the ECB. We do have De Gundos speaking as well at 3:30 today, and we do of course have Powell speaking just before the open in the US today at 2 p.m. So there's a lot of speakers. Fed Powell, when he speaks, he traditionally moves the market. So if you're trading short term, you're scalping, you're in and out, do be wary of that, because of course that's where you're probably going to get sharp movements in price action. We see it all year last year, the CPI movements. If you're trading short term, news related, or even scalping positions, you're going to get high volatility events. Slippage would probably factor in a lot of brokerages, a lot of exchanges, and of course the spreads will probably widen due to the volatility within the markets, and that becomes a pricing scenario by the liquidity providers, by the market makers, to give participants the next availably quoted price, and that's where the slippage obviously comes into play. So just be kind of wary of that. In other data today, not really too much else kind of today broadly other than that. We do have economic optimism report coming at 3 p.m. as well in the US. We do have oil reserves, oil stock change reserves coming out as well at 9:30 tonight. So that's pretty much it from a fundamental perspective. Canada is also speaking. Canada's Bank of Canada, sorry, should I say, Macklin was speaking today as well. And we do have options expiries in the FX markets as well. We've got Euro USD, we've got expiries, we've got GBPUSD, we've got over 460 million in GBP equivalents. USD Swiss, we've got almost $300 million. Aussie USD, we've got almost 350 million Aussie, and USD CAD, we have around about 700 million in fact. But all of those data points are in our Discord as well. We have an institutional section where we share any kind of news, important piece of information as well. For those who trade news, for those who trade short-term price action, we do share that information as quick as possible. And of course, we also have it here in our dashboard as well. Latest marketing news, a lot of Twitter feeds, a lot of news feeds as well. So if you're looking for the latest information, They are kind of the two aspects that I would be kind of telling people to look at. Other than that, you have kind of like Live Squawk, Market Squawk on Twitter as well. So that's it really from a fundamental perspective. There is obviously some setups and charts developing in the trading opportunities portal within the dashboard. If you want to take a look at some of those, feel free to do so. But now what we're actually going to do is we're going to move across to the charts. So first things first, we're obviously looking at the evolution in continued dollar weakness. We saw it in November, we saw it in December, we saw that kind of stagnation, that consolidation into year end as markets really kind of halted per se. We did get a little brief movement on Thursday. However, that very, very quickly eroded after the NFP figures came out on Friday. We saw the dollar really weaken on Friday. We saw the indices get a little pop in strength. So it's important to understand the kind of the correlation, the relationship between those different asset classes, because of course, as we know from previous videos and previous discussions, generally speaking, the dollar stock markets have an inverse correlation. So if one is stronger, the other is generally weaker. And we can see that correlation playing out beautifully over the last 2 or 3 days or so. As the dollar has continued to weaken back to this 103 level, we have seen the indices pop initially on Friday. Now, the indices have come back a little bit, but from the momentum that we saw on Friday, indices to the upside is still in control as we speak this morning. Now, if we look at the broader markets, Euro USD, we're still seeing obviously that weaker DXY is factoring into a lot of progression against the dollar in the G7, G10 space. You only have to look at Euro USD has continued to turn higher. GBPUSD has got a massive rally in the last year, so we'll look at now shortly. So a lot of those FX pairs are still accruing strength after what was that kind of pause into Christmas, into year end. We did come up to this 107 level, this daily order block here at 107, but of course the last couple of days we have completely breached through it. We have taken out the highs here between 106.70, 107, and we are trying to push on through. So that's really going to be the key element here this week, that are we going to see that a continuation in dollar weakness? If we see dollar weakness breaking through 103, the likelihood is that those short-term intermittent trends of Euro USD strength, cable strength, and dollar yen potential weakness, those could continue to play out, because of course the underlying fundamental bias in the dollar will continue to be weaker. Now, that's on the provision that we still continue to break through. We break through the 103 lows and we continue to that elevated downside movement that we've seen for the last, as I said, number of months. Now, we do also have on the DXY, we do also have this liquidity area here around 101, 101.50 is an interesting area short term, because of course that was really kind of the first higher low for that massive run up that we saw in May, June, July, August, up until the back end of the year into October, where we had those highs just shy of 115. So it's important to look at the broader perspective just to see which way the macro trend is facing. Now, of course, if you're trading shorter time frames, you're only focusing on the fives, you're only probably focusing on the ones, the threes, the 15s, etc. But I think the more things you take into consideration, the more open-minded you are in that approach. Now, of course, everyone is different. We don't tell people how to trade, but it's important to have as much information to hand as possible. Okay, so that's really kind of where we are in the DXY here, is filtering through this 103 hand. Now, as we said, Euro USD is progressing higher. Do we see this going any higher? Well, the likelihood is we are still firmly in control. If we look at the 4-hour charts, you can see it there as well. Gradual assimilation in the upside progression. If we go full screen for a second, you can see it there very, very clearly. Gradual assimilation and upside price action into this consolidation range. We did temporarily break structure back to this area down here. However, what happened? Well, the price action came back up for one final grab of liquidity, but then decided to break through it. So we've taken out this daily order block. We are still firmly continuing to move to the upside, which of course means that there is another level up here around 108, 108.50 at around 108.32. Now, broadly speaking as well, you can see kind of if you bring in any sort of SMC order block indicators, you can actually kind of see the break of structure. So you can see the order flow continues to the upside. We've got that short-term break of structure, then we've got the higher time frame break of structure up here taking the highs. So it's really interesting to see, does this kick on? Do we maybe see a pullback, given that we've broken lower, then we've broken higher? Do we maybe get one last little impulse to the downside, maybe back into some of these regions to allow that continuation higher, the higher high, higher low scenario that we talked about? up to this 108.50 level. Well, I suppose that's the big talking point, I think, here now, is to see, do we get any kind of short-term relief rally to the downside, and being able to kind of factor that into consideration as well. If we look at cable, very, very similar scenario, as I said. Bullish trend, very, very clear and pronounced in the broader sense of the price action. You can see it there very, very, very clearly. Market dynamic, market sentiment is obviously still very much bullish. Of course, we had the higher highs, higher lows. Then, of course, we had that top formation. We had that gradual grind lower into year end, which was really not much of an anomaly, given how flat, given how illiquid the markets were at that week or two between Christmas and New Year. We did get that brief temporary weakness into the early parts of January, but of course, dollar weakness again last week has meant that cable has pumped higher back into this 122 level. You can actually see it here, short-term consolidation. We did have a break of structure. We came back in for a second grab of liquidity. Then we made new lower lows before reversing back up to the upside into this area of liquidity over here. And of course, if we add back in the areas, you can see that as well, playing out very, very cleanly. Price action coming back in. So again, similar to euro dollar, is this a short-term top to maybe allow for a brief pullback? So given that we had consolidation, given that we've made successive lower lows, lower low, lower high, lower low, would we get that break of structure? Yes, we did. We broke kind of through the change of character area here. Price action looking for that potential, maybe one last move higher, which would then potentially give the opportunity to see, can we get back up to this 123.50, 124 level, take out the last of this liquidity? Well, at this moment in time, let's wait and see. So it's important to have a clearer logic and a clear approach in the markets, and then just factor everything else into consideration beyond that. USD JPY. Firstly, again, very, very volatile over the last few weeks, of course. Bearish order flow is still continuing to play out. So what's the first thing we can see? We can see the daily order blocks up here at 145. We've got more price action structure here around 139.50 that we talked about into New Year. We did get that dead cat bounce again. So you can still see the order flow is very, very clear, right? What's the first thing we can see here? Trending price action, bearish order flow, successive, very, very clear, elevated price action structure. And of course, when you look at the shorter time frames, what are we looking at? Well, what are we looking at there? We can see that evolution and downside progression. Lower highs, we had consolidation. Very, very clear break of accumulation to new lows. Price action gets a dead cat bounce back into this region up here at 134, and then we make successive lows again. Now, the only thing I would be saying there is USD yen is obviously very, very tricky at the minute because of the BOJ, because of the downside weakness in the yen. So there's probably more favorable dollar pairs to trade off of than dollar yen, because you've got USD CAD has been an interesting move. The Aussie, the Kiwi pairs have been quite interesting, and we'll do a proper deep dive tomorrow in the FX pairs in the dollar as well, at a much, much deeper level. But it's interesting to see, because of course, when you look at the order blocks, you look at that as well. You can see successive lows being made. And that's one thing we talked about there. Lower low, lower high, lower low, lower high, lower low, short-term lower high into new lows. And then what happens again? We get that price action rally back up into the order block, back up into liquidity level. Now, from my perspective now, it's quite interesting to see, does this hold as equal highs per se, and ultimately try and continue to the downside? Well, that's going to be the interesting element here. Or do we see price action maybe holding this for a short-term bottom, enabling a potential recovery in price action, not just back up to that local level we talked about, but more poignantly, maybe back up into this region up here. And that would be nice to see, because every time we've made a break of structure, we've tried to come back up to the order blocks, okay? And for me, that would be an interesting level even there. I think on the 4 hour, we also have got a structured region here there as well. And that's something to kind of keep an eye out on myself. But making sure there's clear clarity in the markets as well, because of course, if the DXY, as I said, breaks through 103, that's going to make things very, very difficult if you want to buy some dollar strength in these markets. Now, if we move across to gold, let me just remove that for a moment. First thing first, with gold, very, very strong elevation on Friday off the back of NFP. Now, structurally speaking, we were following the order flow into New Year. We were looking at the higher highs, higher lows, higher highs, higher lows. That massive assimilation of gold strength again up to the 1860 level. We did get that pullback. Now, we did mention the idea of, could we get back into this liquidity area here, back into kind of 1810, 1815? Well, unfortunately not, because when you draw out your fibs from peak to trough, you can kind of see there very, very quickly that the markets did
react off of that 50 fib. You can see we didn't really get kind of deeper into that kind of discounted areas that we're looking for. The golden ratio 61.8, the 707, 786 levels here. Unfortunately, we didn't quite get there. We halted at the 50. This kind of break of structure line here obviously held. Then, of course, we had that next assimilation of strength back up into this daily region here, daily region of price action way up here at 1875. And of course, that's where price action is currently sitting. Now, of course, gold prices has been incredibly tricky as well, because of course we had Russia-Ukraine, then we had that massive bleed against the dollar across the board. That dollar strength through 2022 was absolutely heroic in terms of the strength, in terms of the underweighted movements. We went from 2,000 to 1,600, just pretty much consecutively, lower highs, lower lows played out, and we're starting to get that cyclical retrace. Now it's a case of, well, if we take out this 1875 level, we can start to pinpoint that continuation to the upside, and really then you're looking for that assimilation and gold strength probably to continue, but really kind of coming back up into some of these levels. Okay, 1950, 2000 becomes a very, very logical target. You've even got price action structure here at 1920 as well, being an interesting zone of interest. But of course, when we bring back in some of those intermittent levels, obviously the daily, you can see it playing out very, very nicely. Of course, if we go to a 4-hour chart, you can see that as well. Also, as we load it up, you can see it playing out very, very nicely. So it's just a case of now, gold bullish trend is very much intact, right? So there's no reason really now to be selling it until we get a break of structure. Until we get a break of structure and a change of trend dynamic, really the bullish gold's play looks set to continue a little while longer. Unless there's some sort of accumulation here at 1875 and the price action really fails to go any higher or deliver kind of above 1890 into 1900, then the likelihood is then that's probably your potential reversal. But until then, until that gets confirmed, gold strength is still very much intact at this moment in time. Then moving across to the indices, firstly, let me just tidy this up a little bit. We can break down the price action. Well, what's the first thing we can see? We're seeing a lot of accumulation and consolidation, right? With accumulation, we had breaking of structure, taking of lows, taking of highs back into the liquidity level. And then we saw that massive rally in October, November, all the way up into this kind of December highs. Then what happened? Well, the CPI in December was the peak formation. Of course, if you go left, you will also see, let me just remove that. You will also see 4-hour order block over here from September, fully mitigated. That was the peak high. Price action comes back down to this consolidated region, breaks through the structure into this year-end accumulation and consolidation. Now, what are we seeing here? Well, we're seeing here clearly that this 4-hour order block here at 4,016 is still unmitigated. So that's obviously a price point that market makers can obviously still come in towards. But then when you look at the price action structure from the last, let's say 3 weeks or so in particular, all we've done is really drifted sideways, up and down, up and down, up and down in a region. Not really that much happening, right? For those who are saying that the volatility has been wild, well, actually, in fact, it hasn't been, because the markets has been so tepid. They've been fairly placid in the broader sense, really up until Friday, up until Thursday, Friday, where we had to see that NFP run up, where we saw that weaker dollar play, we saw the stronger gold, we saw stronger FX pairs against the dollar, we saw the indices progress. And that's where the correlation of the assets comes into play, to see which way is the sentiment within the markets reacting. What is the relationship between these assets? Because if you know that and you can assimilate that, that gives you a lot more direct bias into which way things are going. And then when things change, you then need to say, well, what do I need to sell? What do I need to buy now? As the kind of contradiction to that. Now, as I said, Friday, should I say, very, very strong rally up into this region, kind of come up into this 39.50 level or just slightly above it. We have started to see a little bit of profit taking from that initial impulse from Friday. So of course, if you're looking at range from Friday, you can kind of see that very, very clear, very, very sharp breakout. And of course, this was NFP on Friday. Big run up. Bit of a take profit back into the short-term area, 38.20 here, which is a 4-hour order block. And then we've obviously continued to churn higher through Friday into, I suppose, the early parts of yesterday, where we had our top just after the US session opened yesterday, and markets has come back down. So price action really is just a simple battle between buyers and sellers. If there's more buyers in the markets, the price is going to go up. If there's more sellers in the markets, it's going to go down. Okay, it's simple supply and demand. It's simple price action. If you look at any order flow charts, they will kind of give you the breakdown, the relationship, the battle between the buyers and the sellers as well. Now, of course, what have we seen? We've seen the price action come back in here, back to this 38.80, 38.75, 3900 level, and that's where the price action kind of halted last night and through the Asia session tonight. Now, it's interesting to see. There's two things that could happen here, right? One is price action comes back into this level at 38.20 and just continues churning higher again. Or we see Powell's strength today continue picking up these markets, breaks back above this 3900 level and tries to push on directly. And in that case, then that becomes a short-term high, short-term pullback, unmitigated price action structure. And the likelihood is then that the markets will just assimilate an upside approach and be set for kind of a drive to 4,000. So I think that's going to be important today to see how does the markets react here, to see how does the sentiment face, because of course, if the DXY picks up strength, that's going to put some pressure on the indices. If the DXY weakens, breaks through 103, you're probably going to see that orientation of risk aggression in these markets continue to play out. And that's just something to have in the back of your mind as well. Now, if we look at order flow as well, you can kind of see this 4-hour level. We've obviously some bottoms here, which was the consolidation through December. You can kind of see that playing out nicely as well. And of course, Friday, massive impulse with an unfilled, unmitigated area of interest just there, as I said, around 3800, 3820. So worth keeping an eye on that one there on the S&Ps. As we move to Nasdaq, Nasdaq is a little bit more complex. So we look at that now. Nasdaq, obviously, this was the September, October lows, that run up, very, very tame run up. Of course, we did break through 12,000. That was the December CPI. Very, very clear truck and trailer type scenario where we're up and then we're directly back down. We don't get the bearish engulfing, but we do get back into this kind of structure here, back into this region. Then, of course, we had more fundamentals. They always say the fundamental is the narrative for the markets. But again, when you can spot these things, when you can spot the hunts of liquidity, it makes things a hell of a lot easier. It really, really does make things a hell of a lot easier. And of course, we've sold off from that 11,800 level directly all the way back down to this region here. And of course, this was a 1-hour order block liquidity level just underneath 10,700. And of course, that's been our bottom. Very, very clear upside reaction into short-term local highs here on the Nasdaq. You can see it there around 11.2. If I just zoom in for a second, you can see that there very, very clearly. And we're really looking to see, well, does the price action actually kick on from here? And if it does kick on through 11.2, you're really looking at all of this unfilled, unmitigated price action, selling order flow the whole way down, really being the option for filling on the upside. And that is, of course, a 500-600 point move. So it's just making sure things are clear. There is also a structured consolidation short-term high here. So you've obviously got short-term highs, breaks out, comes back down to retest. So that could be an interesting retest level there. If that holds and doesn't come down here to mitigate, that could be the platform. This could be the springboard from where the bullish bias starts to filter through. And we, of course, then if we take out this 11,200, 250, 300 area here, then of course that allows for the springboard to fill all of this unmitigated price action that we saw through the middle of December. So that's the Nasdaq. And again, bringing in these levels again, you can kind of see it as well. Okay, order block level, manipulation up here at 12,200, short-term highs here between 11,250, as I said, and 11,300, and that becomes the interesting level. And of course, we did have the short-term price action structure within the consolidated region down here. So that then brings us to the Dow Jones. So the Dow Jones, very, very clearly, okay, logically speaking, what are we seeing? Very, very clear bullish order flow. So daily price action, go back up to this initially, daily order block filled, comes up, takes the wick, back down, break structure out of this region here, flags all the way back up and almost fills the grab. Okay, the daily wick here is almost fully mitigated. There is a 4-hour structure there, which is unmitigated. So that could be maybe the platform for maybe one last drive, or maybe kind of a structured flagging pattern up here, maybe like so. Then be the dynamic then where we change the bias and obviously start selling off. But at this moment in time, obviously initial selling has played out into this consolidation. We've got, or just about, or just shy of, should I say, the daily order block, but that doesn't mean that we can't continue to move a little bit higher today. So just be kind of wary of that. Dow Jones is a little bit more progressive in in the price action than, let's say, the S&P and the Nasdaq. Why? Because the Dow Jones has outperformed through October, through November, through December, whereas the Nasdaq has still a lot of price action to fill, and as does the S&Ps as well. So it's just looking at the differences and how the three indices are laid out concurrently as well as important. Next on the list is the European indices, right? We move across to Europe. DAX, FTSE, DAX, FTSE, and Euro Stoxx have all been on a massive rampage, right? We saw it in October, November into year end. DAX month end highs really came at the early parts of November. We obviously had that consolidation. We'd break of structure. We flagged up. We did marginally take the short term highs here, but didn't take the wick highs from, as I said, June. We rejected that, and of course, we did falter back up into this 13,750, 13,800 level. Now, of course, what we've seen in the beginning of the year is European indices have widely outperformed. They've actually done really, really well. If you look from the price action kind of from the 3rd, 4th of January, DAX is up 800 points. Euro Stoxx, if we go to a higher time frame for a second, just to kind of get the broader viewpoint, Euro Stoxx is up massively. Okay, it's gone from 3,800 all the way up to 4,050. That's a 250 point move. All right, if you get your percentages in play from where we were early parts of January, that's a modest 7% increase. Not bad if you're in the stock markets and you're holding European assets at this moment in time. Similarly, again in the FTSE, right? We moved the FTSE over, higher time frame approach. We've absolutely blasted through this 7,700 level. Liquidity area, very, very important area of price action. We did get that top out way over here at 7,650 or just slightly underneath. We did break structure short term back into these short term higher lows here at 7,300. 7,300 has been the benchmark for price action to push back in. What has happened here? We've pushed through 7,700. We've taken out this high. So, like, in my opinion, once we've taken out this short-term high here at 7,630, there's no reason why to be selling this, because the logical scenario is it's going to try and come equally higher and probably test 7,700. Now, what's happened? We've actually broken through 7,700 on Friday. We've got the retest back into 7,700 yesterday, and the markets are trying to push on again. It's not completely inconceivable to see this going 7,800, because when you go left, and you look at the price action structure from 2018, FTSE was the only index that never made new all-time highs, right? So that's also important to take into consideration. But there is a lot of liquidity up here between 78 and 7,900, and that becomes the dangerous territory for traders who are maybe stuck in shorts at this moment in time. Now, when we go back to the shorter time frames, right, we look at for the shorter time frame structure and the price action. Well, obviously, bullish order flow is still very much playing out, because, of course, that was the consolidation, the change of character, the break of structure, comes back into this region, holds into year end. And then, of course, what happens? Then we drift sideways. And then, of course, start of January, we get that bullish impulse, price action breaks out, and then we're continuing to play the bullish order flow as we get higher highs, higher lows consecutively. And the price action is obviously still churning very much higher at the short term. So even looking at it here, very, very bullish move Friday and obviously Monday. Price action pull back very, very early this morning. Pull back into this region. Didn't quite get into this zone of interest here. So this 14,600, 650 level here was kind of what I was paying close attention to. But of course, it hasn't really come back in. We've seen a little bit of a reaction above it. Now, if you do introduce your fibs from short-term high to low, you can actually see where we did get a bit of a reaction. So although it didn't come into the prime time area here in highlighted in gray, it has reacted off the 61.8 very, very nicely. And of course, off the 707, 786 zone of interest that we tend to look for as well. So that's an interesting one. Euro Stoxx, again, is just continually to churn higher, which I think is really, really interesting at this moment in time. Short-term highs, flags back into region, consolidates into year-end. But of course, when we bring in the order block liquidity zones, you can see that accumulation, you can see that gradual assimilation back into the upside. And of course, it's taken the November highs again, which is important. If we look at a 1 hour chart, just to kind of break down the price, actually, you can kind of see it there as well. It comes into this 4050 level, this 4050 level that we talked about in December. If you don't remember, feel free to go back and watch those videos. We talked about this daily level. Of course, we did reject it. We did pull back. Then we sprungboard through it. We came back for the liquidity grab, and price action is churning higher at this moment in time. So European indices very much on the front foot. It'll be interesting to see with a bullish, maybe Powell commentary, can the US indices follow today? And if the US indices follow, and we see gold continue to progress to the upside, that could put a bit of pressure on the DXY, put a bit of pressure on the dollar for those who trade the FX pairs as well. All right. So that's pretty much where we are at the moment. Everyone, trade safe this week. Of course, first full week back. A lot of data to look forward to this week, a lot of information ahead. I suppose if we look at the economic calendar just for the next day or so, we've got Aussie balance tonight, which will obviously be important. We've got core inflation on Thursday, and we'll be running through. We'll be doing more videos this week. We'll be looking at core inflation specifically in the US, and of course on Friday we do have balance of trade out of China as well. So there's a couple of important points of interest coming out this week. So of course, as I said, trade safe, have a good week, and take care.